inflation, interest rates, sovereign debt levels, the price of Bitcoin, all those metrics are in the spotlight these days. Today, follow me as I want to take you below ground level into the vaults of central banks. You'll see why. We're all talking about store of value, the dominant narrative around Bitcoin. We're talking about central bank reserves. Traditionally, central banks have been holding gold in their reserves, especially after the global financial crisis of 2008. They have been increasing their gold holdings. No country is the same. I'll zoom into China and Russia as geopolitical tensions with the US have been increasing. And as a result, one of the many reasons that these countries have been accumulating more gold are these geopolitical tensions. As of 2023, China has nearly 2,000 tons of gold, up from 1,500 tons in 2000. Comparatively, Russia has more. They've accumulated 2,300 roughly tons by 2023. They especially accelerated purchases after the 2014 invasion and sanctions from the West over Crimea. The other countries that are accumulating are India, Turkey, Poland, and Kazakhstan. And even though these emerging economies, emerging markets have been accelerating their accumulation of gold, still the US is leading in terms of holdings. They have over 8,000 tons, while, to give you a perspective, Germany has over 3,000 tons, Italy and France around 2,500. What may come as a major surprise to you is the low level of gold reserves held by the Bank of England. They have only around 300 tons of gold. They held in the 1950s, more than 70 years ago, 2,500 tons, but today they hold very little, while at the same time, in the vaults of the Bank of England, they hold 400,000 bars of gold that belong to other central banks. And this is the important point. According to a survey in 2023 by Invesco, 68% of central banks held part of their gold reserves domestically. So there's been a shift, a reaction to the freezing of Russia's reserves in 2022. And these central banks have repatriated in domestic vaults their gold reserves. And this is true for Germany, Austria, Poland, Hungary, and others. So they're taking their gold reserves, and this is expected to grow. So the 68% of central banks that have taken at least part of their gold reserves domestic is up from 50% in 2020. And this is expected to increase and reach around 74% in 5 years. And keep in mind that central banks that are taking their gold reserves from London, where they've been traditionally held, they're also foregoing yield, because when they're sitting in the vaults in London, they are typically lent out. And even though gold doesn't have a yield per se, by lending the gold as collateral, they were earning some yields, and therefore going that. So this is an important trend to keep in mind, while Larry Fink, the CEO of BlackRock, is continuing his campaign around Bitcoin being the digital gold. So if Bitcoin is the digital gold, my outrageous 2024 prediction early in January was that two central banks in 2024 will start accumulating alongside the gold reserves. Now, Bitcoin is superior to gold in terms of not only liquidity, but also sovereignty. Why? Because Bitcoin can move on decentralized rails infrastructure, unlike gold. And if you think that tokenizing gold via gold token can sort of move gold on these new rails, the new decentralized infrastructure, that is not. Gold tokens may offer value and provide accessibility to retail investors, but for institutional investors and central banks, there's no added value, to gold tokens compared to holding gold in ETF wrappers, as they have also done, and physical gold. Basically, Bitcoin cannot be seized, and therefore it can help hedge against geopolitical uncertainty. So as we see Bitcoin being integrated as an investment product, as a new asset class, the narrative and the perception in the market is changing. Right now, the assets that have been accumulated through the ETFs, the spot Bitcoin ETFs in the US, are really breaking record numbers. Not even the most hardcore maximalists believed these numbers, and they continue. What is also starting to happen right now is that these ETFs are going to make their way into holdings of other funds. And of course, they might replace some of the holdings of funds that were already focused on providing exposure in the crypto sector and were holding stocks like miners or crypto exchanges that you can expect naturally. But what is happening, and is just starting, is that the spot Bitcoin ETFs are going to be held in traditional asset allocation funds. Already BlackRock has, for SEC approval, to include its Black IBIT Bitcoin spot ETF into its BlackRock Global Allocation Fund with ticker MALOX, which is a 17 billion multi-asset fund. So we're going to be seeing more of these. And think of it this way. Already, a couple of major central banks, like the Bank of Japan and the Swiss National Bank, hold stocks and non-traditional assets, from big tech stocks to other assets. So a small allocation in Bitcoin wouldn't be a major shift. So along with the shift of moving physical gold reserves away from the two big centers, New York and London, to domestic vaults, it is reasonable to expect that soon central banks will embrace the new digital gold. It is reasonable to complement their gold reserves with this digital gold. I expect this to start happening. It might already be happening, but not be public knowledge. But I expect this to happen from at least two major banks.